Good morning, everybody. How we doing? Happy Friday. We made it to Friday. It's always exciting. I'm Spencer Israel. You all should know me by now. We are doing another one of our all access events, everybody. These are events. I think of these as like a hybrid between our usual programming and if you've ever been to one of our like full day conferences, like the EVCon last Wednesday, all day event of investor presentations. It's a hybrid of that. It's somewhere in between. It's not quite an investor presentation, but it's also a little bit more in depth than a lot of our usual interviews we do, because usually we get a guest on for 5, 10, 15 minutes, and these are meant to be a little bit longer than that. So what I tell the people that we have on the show is a hybrid between investor presentation and podcast conversation, a little bit somewhere in the middle. We want to go in depth on companies that are emerging, that don't get a lot of attention otherwise, and really get to the stories, right? We're not here to talk about the stock and why it should go up or whatever. We're here to talk about the story of the company, the story of the founder, and what they're doing and their plans going forward. So two speakers, two guests on today's show. My first guest is already here with me. I'll bring him on in a second here. Evan Gappelerg. He is the founder and CEO of Nextech AR Solutions. And then in a little bit, I'll be joined by Gary Santo from Tilt Holdings. He is actually recently named their CEO. So I'll ask Gary all about that. Full disclosure, as I say before all of these events, is that the speakers on today's show are partnered with Benzinga, but they do not know what I'm going to ask them. We have not talked about specific questions. I'm sure they have things they want to say, but they don't know what I'm going to ask. And so it is spontaneous in that way. But the video is demonetized on YouTube for that reason. So I'm getting that disclosure out of the way. I don't want to hear anyone say anything about that afterwards, because I say it every time. Real quick thing before I bring Evan on. Let's smash that like button, everyone. How many likes are we at? Not enough is the answer. Let's get to like 50 likes here in the next 10 seconds. 50 likes, and then I'll feel comfortable. And I have no problem letting Evan just sit there. And we can all sit here together in silence until I get my way. You know that I'm capable of doing that. I won't actually do that, but if I could, I would. I would. Okay, enough chit chat. Enough of just me. You don't really want to hear me blab, right? Nobody wants to hear that. Let's bring our first guest on today, Evan Gappelerg, as I said, founder and CEO of Nextech AR Solutions. And there he is. Evan, good morning, sir.
Good morning. I'll give you a like, Spencer. Here's two likes from me.
Thank you. Well, you can only like it once, but I appreciate the enthusiasm. Actually, maybe if you did it twice, you undid your like, but that's okay. We'll let it slide. All right, Evan. The first question I always ask everyone, especially because the companies on our All Access show, may not be in the mainstream, may not get a lot of attention. Tell us about Nextech AR. Then after that, I want to get into your background and how this sort of started. But tell us about the company and the business.
So sure. Nextech AR Solution is a diversified technology company. I founded the company back in 2018. We're right now in the midst of a very important growth period and really transition. If you look at augmented reality, it's only recently just come into the limelight primarily because of COVID. And if you look at our tech offerings, we have an array of very potent augmented reality technology offerings. We have our primary offering, which is AR for e-commerce. So if you think about being able to see a couch in your space or a chair in your space, whether you're shopping on Kohl's, which is one of our customers, or you're on Kmart or Pier 1, you're probably looking at one of Nextech's augmented reality experiences where, again, we're turning shoppers into buyers where they're able to visualize holographically a couch or a chair or a piece of wall art or even a vacuum cleaner, which is hilarious, right? And so that's one AR technology. Another AR technology that we have is the ability to create human holograms at scale. So there are other companies that make technology for human hologram projections, but we are the only company that I'm aware of that can do that at scale. Meaning, just like you take a picture on your phone, and Instagram has billions of pictures. We can do that with human holograms with our HoloX app. It is breakthrough technology. We also have a CAD to poly technology, which means the whole manufacturing complex makes their products as CAD files, computer aided design. We're able to turn those very quickly into a poly file. Nobody else can do that. Again, these are SaaS products. We also have an AR ad network. Like I said, we're diversified. We also have a virtual events platform. So those are our primary product offerings in the world of technology. And we're super excited because the time is now. The market is taking off in a big way.
All right, so we'll get back to that market in a second. Today, let's backtrack if we can.
Sure.
You are the founder in addition to being the CEO. So
Yeah.
tell us about your background and sort of what led you to creating an AR company.
Sure. So my background is Wall Street. And so when you're on Wall Street, it's always about, the hot sectors. It's always about the new thing, right? If you're just in, let's say, oil and gas stocks, but you're on the wrong side of that cycle, you're going to get crushed as an investor. So you want to really find these multi-decade mega trends, and that's what I became very, very good at on Wall Street. And so technology is one of those multi-decade mega trends. And then within technology, you have subsectors. Like if you look at cloud computing, that's now become a multi-decade mega trend. If you look at EVs, electric vehicles, that's now become, with the emergence of Tesla, a multi-decade mega trend. Drones is on the horizon as well. AI is a big part of all these technologies. Actually use AI, and augmented reality and virtual reality. They all use AI as well. And so I started out on Wall Street. My claim to fame is really taking Take-Two Interactive Software public. That was, a $6.5 million raise on a startup. They essentially pioneered putting actors into video games, and then ultimately turned that. Christopher Walken was like their first actor. I'll never forget him sitting inside of a video game. Like, this is the first time that anyone had ever really done that. And now it's Grand Theft Auto. They're a $15 billion plus public company, symbols TTWO. So if I look at Nextech, it's really that all the steps all in my life prior to Nextech have led me to this place where augmented reality is the next big thing, in my opinion. And I wanted to get in front of that multi-decade, multi-trillion-dollar mega trend. And we did that. We did that with Nextech AR Solutions. And the idea here was that we were going to try and come to market with multiple solutions, as opposed to being a single point solution company. Very complicated, not easy to do, but we've done it. Are you still there?
I muted myself while you were talking, and then I forgot to unmute myself. So you're at Take-Two. It goes public. It's great. They're one of the largest video game publishers in the world. And so, but like, what exactly? You said you wanted to be in AR, but what exactly did you see, and what, like, take me through the steps of
Gotcha. Yeah.
leading to the creation? This is in 2018, right, or
Yeah.
2017?
Yeah. So if you look at 2017, ARKit, AR Core came out. That was Apple and Google essentially creating the toolkit that allows tech companies to create AR experiences inside of an app. And so I was introduced to augmented reality in 2017. And when I saw it, I was just blown away. I had never
Yeah.
seen anything so immersive. I had never seen. It felt like I was just peering into the future. I was convinced that I had seen everything. I thought I had seen it all. And then I saw augmented reality, and it wasn't a product, it wasn't a couch. It was like a character from outer space that was, like an alien essentially, that was moving. And it just took me a minute to understand what I was seeing. And then after doing some research, I realized that this was a very, very important moment in time. This was really the crossing over from the 2D world that we've been living in for eons to a 3D world, that Ready Player One world, where the world that we're living in today is really just a taste of the world of tomorrow, where everybody's going to be wearing AR glasses,
Yeah.
and you're going to see AR experiences happening all around you. You won't have to press any buttons. They'll just be ever present. And really that speaks to the metaverse, which is, what Zuckerberg has made famous recently. And we have our metaverse, our mini metaverse offering at Nextech that we're actually bringing to market as well. So I hope that answers your question. I mean,
Yep.
it was about getting, I guess, bit by the AR bug, where when I like to have fun in life. I saw augmented reality as a very fun technology, it's not like a mainframe computer in a room. It's not
Right.
like that,
Right.
which would be super boring to me. No interest. I don't write code. It was like, okay, this is going to change the world. I want to get in front of this mega trend. Let me figure out what products I could bring to market. And as I mentioned earlier, we have augmented reality for education, augmented
Yep.
reality for
Yep.
e-commerce, right? And
So,
so, yeah,
so that was 2017. I'm trying to remember. I think that was the summer of Pokemon Go, but I
2016 was Pokemon Go. Yeah,
16. Okay, yeah. So this is okay. So yeah, I mean AR exploded right all of a sudden.
yeah.
Ready Player One hit theaters, right? And yeah, so you saw what was happening.
So surprisingly, Spencer, Pokemon Go was not the reason. Like I was
I,
not.
I didn't say it was. I didn't say it was. Yeah, yeah. It may have been the reason that people like me heard of AR,
Yeah,
but not people like you. So okay, that leads us to 2018, and you mentioned now, you have this cool technology, but that doesn't mean you have a business, right? You
right.
need to figure out the business case. So you've got four. So you said you've got the four solutions. I'll bring them up on the screen here in a second. But how do you figure out a business for a technology that is so new? There aren't any established businesses for AR, right?
Exactly.
So
Exactly. Yeah. So it really was like getting dropped in the jungle,
yeah,
you know, and like, it's kind of like here's a machete and blaze your path. I mean, that's kind of what it felt like. And it was kind of interesting because I did get tapped by Google. They were, let's call them the Jungle Kings, and
hmm
I did get tapped by Apple, another Jungle King, and they were just like, "Hey, welcome to the jungle. What are you doing here? You look lost." I was like, "Yeah, well, I'm here because of augmented reality." And they're like, "Okay, well, it's really, really early." So this was late 2018, early 2019. We went public Q4 of 2018, and Apple and Google were kind of amused by us as these new company that emerged. And so it was very, very apparent to me very early on in 2019 that the industry really had not started in a meaningful way. Meaning you had these one-off Pokemon Goes, but there really weren't any. There wasn't a
right.
lot of business to be had. So we were trying to create augmented reality for e-commerce back then, and I realized this was going to be a very long road, longer than I thought, let's say. And so I acquired an e-commerce business in early 2019 called vacuumcleanermarket.com, which is hilarious because, vacuum cleaners are probably one of the most boring technologies, although
Yeah.
the Dyson stick vac.
Actually, yeah. I hear a lot about the Dyson, so maybe not, but
Yeah, right, right. No, it's kind of funny. Historically, it's been pretty boring,
sure.
Electrolux, right? But they actually have come out. I mean, I have a Dyson stick vac. I think everybody wants a Dyson stick vac if they don't have one.
Right.
So, it is interesting. So we do sell Dyson stick vacs. You can go to vacuumcleanermarket.com. That is not our primary business, but we used it as a test bed, and it worked, meaning we were able to test our technology. If you look at Amazon, I mean, they own Whole Foods.
Mhm.
Why do they own Whole Foods? They're not in the food business. They're not farmers, right? They're not seed to table company, right? Amazon, no. So why would they do that? They did that because they wanted to have a test bed. They wanted to be able to test and see what happens with customers and a customer journey. And so we've done the same thing with augmented reality, which gives us a leg up on our competition. Ultimately, vacuum cleaner market, and we also have a pet supplement business. They exploded in 2020 because of the pandemic, right? Because everybody stayed
Sure.
home. All of a
Sure.
sudden, we had a very difficult time keeping up with demand. That business has grown by
Sure.
500% since we acquired it. So from 2019 to today, it's up very, very dramatically. Again, that's not our primary business. 2020, we also acquired a virtual events company. So in 2020, the virtual events business exploded. 2021 is really the year that we've acquired a couple of businesses in the augmented reality space that have really put us on the map in augmented reality and give us a leadership position to be able to take advantage of the market. And I will say, it is here now. Whereas in 2019, the demand was not here.
Hmm.
In 2021, and as we roll into 2022, the demand is here.
Yep. So I want to go through these one by one here. The Forex Solutions. So we talked a little bit about the e-commerce, but can you go through these a little bit more in depth here? We'll get to the metaverse last, but go through each of these sort of business lines, these use cases that
Yeah.
you have figured out.
Yeah. So let's say you have an e-commerce site. Uh, Kohl's is one of our customers. Kmart is a customer. Sears recently landed. Pier One. Sears, by the way, is owned by Transform Co., which is Sears, J.C. Penney.
Okay. I was going to say those companies are still around, but
They're
they're
still around.
they're all private equity, I think.
Yeah,
Yeah.
exactly. And so the bottom line is that those businesses are trying to bridge the gap between the digital world and the brick and mortar world. And so how do you do that? How do you take somebody who's online shopping for a washer dryer, shopping for, these are, I'm not talking about things like toilet paper, like
Right.
whatever. I'm talking about things that are high ticket, things that you need to know what they look like in your space. You need the measurements for. So it could be wall art, it could be carpeting, it could be the paint color on your wall, it could be a couch, it could be a chair, it could be a coffee table, it could be a bed. So those are kind of, just a sampling of some
Hmm.
of the products. So we have the ability to, from a 2D picture, just a picture, take a picture and turn it into a 3D augmented reality object. What does that mean? When you're online, you click on a button that says see in 3D, and this is on your desktop or laptop, and it works on mobile and desktop laptop. And so you're seeing it now in 3D on your desktop laptop, spinning it, zooming it, pinching, doing whatever you want to be able to get a visualization. Then when you take out your mobile phone, you're able to click on see in my space. And now all of a sudden, the couch, the leather couch with the tuffets are sitting in your living room.
Yeah.
You're able to to size. So you're able to see if it fits between your end tables, and you're able to see if the decor matches. And from that, you're able to have the confidence to click buy, purchase. And then it gets delivered. And guess what? It fits. And so what don't you do? You don't send it back. You don't return it. Returns are a
Right.
$300 billion a year problem. Returns for the
Really?
furniture industry, yeah, it's a big problem. Like, I mean, I don't know about your wife. My wife, with Amazon, she's constantly like sending stuff back.
Yeah.
It comes and then it goes, and it comes and it goes. And so this eliminates all that.
Yeah.
This, right?
Yeah. If I can offer you an idea here, the dogs are barking. This would be really great also with IKEA, because
You do a
IKEA is,
lot, right, when the
yeah.
dogs are barking.
Yeah, because with IKEA, they build out the rooms, but it'd be much easier if it was all virtual, because maybe they can't do that online. But okay, so there's your real world use case for retailers. Let's keep moving here, and let's go to the where do you want to go next? Let's go to the education technology side, the ed tech.
Sorry, my dogs are just gonna bark their brains off until they're done.
Listen, you know what? In 2019, that would have been considered uncouth, but post-COVID, all bets are off. So
Yeah. So with education, we have Ryerson University, which is a major university up in Canada. They have about 50,000 students. And we've created about 85 augmented reality labs. So if you think about learning, you can learn now with the same augmented reality technology. And if you think about learning, this is a very immersive way.
Listen, Evan, it's all good, man. Like I said, we're in a post-pandemic world.
Yeah,
it's fine.
Get any better. I mean,
it's fine.
It's annoying to me. Hopefully the listeners understand.
It's
but
fine. It's fine.
The bottom line here is that we have a first mover advantage with augmented reality for education. Ryerson is our test, and we're now rolling it out to 10,000 universities. So, Microsoft is our partner. And we, you could scan that QR code you see there. So think about dissecting a rat. We've created 85 science labs. So biology, chemistry, and as time goes on, we're going to resell those labs to other universities. We've generated as I mentioned, about 500,000 in revenue off of one university. And so there's a significant amount of business ahead of us, and we have a first mover advantage. We also have the ability for the students to be able to use our technology, our Unity plugin, to create the augmented reality labs themselves. So if you think about it, you're a student at Ryerson University, or it could be Carnegie Mellon, or any of the universities that we work with, and you are introduced to a class where you learn how to use Nextech's Unity plugin. We actually have instruction. And then from that learning, you're creating an augmented reality science lab yourself. So you're learning how to create the lab, then you're in the lab learning about the lab, and then other students can then use the lab. And so it's next level. It's very sticky. And we did a test with Ryerson on 25 labs. They've come back 3 times, which means it's working really, really well. We get a lot of accolades from the students and the deans and the professors. And so it's a blue sky business for us, because there really isn't any competition for what we're selling.
Is this a business that existed before COVID? And if so, well, actually, regardless of that first question, how has COVID sort of impacted that business?
So it was starting a little bit. There was interest, but it accelerated. That's really the storyline here, is that augmented reality, there was an interest, but it went into turbo mode in 2020. And now, yeah. And now everybody sees how well it works, and they just want more. It's really that simple.
Demir in the chat is reading my mind. Demir, you and I are on the same wavelength. Demir is asking if Nextech's going to pursue its own form of Shopify. Well, that's sort of what the ad network in a way is getting at. Let me bring that up on the screen here. Tell us about this is your third use case here. Tell us about you're building like a 3D ad network.
Yeah, so it's actually built already,
Okay.
and we're serving up 3D ads. And every time we sign up a customer for our AR for e-commerce, remember, we've created a 3D asset. In some cases, it's dozens. In other cases, it's hundreds. And in other cases, it's thousands of 3D assets. And
Yep.
so those 3D assets can then be repurposed in a 3D ad that we run for them on our ad network. And there's a significant uptick in click-through rates. And again, it's the ability to interact. It's immersive. The returns go down. The purchases go up.
Yeah.
And so, the future of advertising, I think everybody knows, is 3D ads and augmented reality ads. There's no question about it. And actually, it gets even more interesting. Google is now indexing 3D assets higher in organic search. So think about what I'm saying. Google's algorithm is about to change, where if you don't have a 3D asset versus you do have a 3D asset, Google's going to rank you higher with that 3D asset, which really just puts the wind at our back as a technology company that creates 3D assets at scale, where that's our primary business as we go forward. And then we use those 3D assets in ed tech, in ad tech, in e-commerce, right? That's really the story.
Sure. So I'm trying to understand how that works. So this would go like on top because Facebook and Google dominate the digital advertising market, but there are also ad network platforms like the Trade Desk, et cetera, that sort of live in the ecosystem. So like, how does 3D AI, how does that sort of fit into the ad network ecosystem?
So think of it like this. We create the ad unit.
Okay.
You then take it to whatever platform you want.
Okay. Got it. Also, put a 1 in the chat if you're like me and you just figured out 10 seconds ago that it says 3D AI THREEDY and you just put 2 and 2 together, because I did while you were talking. So it's been a long week. What can I say? All right. We've been talking for a while here, 25 minutes or so with Evan Gappelerg, the CEO of Nextech, and we've got to get to the most fun part of the business. I'm sure the question you get asked about the most, the metaverse. Evan, this is not necessarily a new concept, but it got some attention the other month when Mark Zuckerberg started talking about it a lot. Anyone who's seen Ready Player One knows what this is. But tell us how Nextech integrates with the metaverse, which,
Yeah, I mean, if you think about the metaverse, was kind of created. Well, let's say that Zuckerberg put the metaverse on the map, right? So, the metaverse is really, in my opinion, I was looking at the metaverse a couple of years ago as essentially an AR point cloud, right? So if you think about being able to be anywhere globally and having AR experiences just exist, where you're essentially living inside of a computer, almost like a computer simulation, right? And so now to actually build the metaverse is a whole nother thing. And so when you look at what Nextech brings to the party, we acquired ARway, which has the ability to spatially map. So imagine you're in your room there, and you're mapping your room using our technology. You basically just take out your cell phone and you're scanning the room. You've just created a mini metaverse. Okay, so what? What does it do for you without the experience, the AR experience? Well, we have the ability to create the metaverse, and then we have the ability to populate the metaverse with human holograms. We could populate the metaverse with product holograms. We could populate it with augmented reality labs. So we could have a metaverse on a university campus where we've essentially scanned the campus.
Wow.
You have geolocation mapping. So, let's say you're a freshman, you show up. Where's the auditorium? Where's my 101, science class? They have no clue. And so, this mini metaverse would give them the ability to just have a drop down menu, click on where they want to go, and arrows would just start telling them essentially the direction, just like you have your
Where,
Google Map.
where was that technology 15 years ago? Is my question. When I needed it.
Exactly. Exactly. And so as you think about that, imagine you're walking past one of the statues. Every campus seems to have statues on them of
Yeah.
luminary, right? And that
Right.
statue comes to life as an augmented reality experience, tells you their story, how they became a statue, and
Yeah.
why it matters. And then it's kind of like this immersive experience throughout your day on a campus. We call that the mini metaverse. So we can build that today. We at Nextech, we have all the technology to build mini metaverses today. And
Yep.
we're in the process right now of creating a studio product offering so that, it's one thing if we create it. It's a whole
Right.
nother thing if we give the power to the people where everybody becomes a creator. That's why Facebook exploded, Instagram exploded,
Yep.
all the social medias essentially exploded, TikTok, because everybody's a creator. And
Mhm.
so Nextech's goal is to have a mini metaverse studio where you, Israel, can be a creator of your own mini metaverse. Universities can create their mini metaverses using our tech.
Mhm.
Museums can create mini metaverses, hotels, on and on and on. That's what we're building at Nextech.
I'm loving this slide here that I'm going to bring up, this one. So there, right there, where my mouse is circled, that's where Nextech fits into the discovery aspect of it. But this really puts into perspective just how big the ecosystem is for the metaverse and how many companies potentially could be involved in this thing, or maybe they already are. In many cases, they already are, like you and Facebook and Nvidia and all that. But this really just puts the whole thing into perspective that we are like so early days in the metaverse.
Yeah.
So yeah,
Yeah,
sorry, go
I
ahead.
would just add, you have Facebook, Epic Games,
Right.
Microsoft, and others that have identified the metaverse as the future of the internet and computing itself. I mean, we talk about it very lightly because it's kind of fun, but
Mhm.
it shouldn't be understated. It is a big deal. And Nextech has this first mover advantage in the mini metaverse. We think that the mini metaverse business case is here to stay and the implications for our future growth. And we're only talking about 2022 Q1,
Right.
meaning not like 10 years from now. And it's going to be available for brands and companies, museums, corporate headquarters, theme parks, sports stadiums. I mean, imagine you walk into a sports stadium and all of a sudden, you have Hall of Famers as human holograms popping in and out as you're walking around. Imagine being able to find your seat. And so we see the mini metaverse is the first step towards universal mapping, which today it's just a concept,
Sure.
but you probably need like an army of drones flying around mapping.
Wait. I'm just realizing what you said. You said Q1 22.
Yeah,
So can you go into a little more detail about that?
we have the tech today. All
Okay.
we're doing is building a studio so that you can create. Like if you hired us, we could create a mini metaverse for you today.
Okay.
Okay. But that's while that, that's good. That's not the goal. The goal is to have a studio product offering. Like, you could log in and create your own mini metaverse. That's really what we're building, and that will
Yeah.
be out in Q1. So that, if you think about all these sports stadiums and campuses, there's just no way we can get to all of them. There's just no way,
Yeah.
so our way of doing business is creating the tools, just like, I'm going to use Instagram.
Sure.
All you need is your phone, take a picture, you're now on Instagram.
Right.
With our technology, all you're going to need is your phone, download our app, scan your university, scan your museum. It literally takes minutes. I mean, it doesn't take like weeks and months. It takes
Right.
minutes. You're basically walking around and just holding your phone up. And then you have the point cloud that you've created. You'll go into your studio and you'll create, let's say, human hologram experiences on our app, HoloX. And it's literally the same thing as videoing yourself. That's how complicated it is.
Right.
Have you ever videoed yourself? Yes. Okay, well, then you could turn yourself into a human hologram. You take that human hologram, you go into the studio, you drop it in at a location on this map
Yep.
that you've, right? And now you literally have a mini metaverse where you now have this hologram that lives at a location. So it could be a doorway, when it could be just a hologram
Right.
that says hello to people when they walk in, and it's always there. It's ever present, never sleeps, 24/7, always on. You have to press a button. You walk into a museum or a stadium, and the hologram is there. that's,
Yeah,
that's
we heard from a company last week that's in the hologram game, and the business case is fascinating there. I'm not ignoring the chat, I promise. There's a couple questions in the chat I'll get to real fast. This is from Roy. Is Nextech open to a merger from a larger tech company?
we never say never,
Okay.
Roy, but that's not our focus.
Okay. And then I think that was the one I wanted to get to. All the other questions were already answered in the chat. But if you have more questions, guys, drop them in. We're on with Evan Gappelerg. He is the founder and CEO of Nextech AR. Just to wrap it up here, Evan, we just went through the 4 business lines. Of the 4, what is the one that either is most important, you think, to your business, or the one that just gets you excited the most?
The most important thing isn't really our solutions,
Okay.
actually. It's actually our business model. The business model is transitioning from a managed service where, again, like I was mentioning earlier, you could hire me. That's a managed service.
Yeah.
Right? To a self-serve SaaS business. That's where we're moving all of our technology so that you can create your own accounts, pay us a monthly fee, and have access to all of our technology under one umbrella offering. That is really Nextech AR Solutions. That is the top of the mountain for us, where you log in and you could create your mini metaverses. You create your human holograms or your product holograms. You could push them through to an e-commerce site. You could push them into mini metaverses.
Mm-hmm.
You could push it into a university ed tech learning program. You could push them essentially anywhere you want. But the point is you have one login. You have a studio. You're creating these experiences, these 3D AR experiences. You want to run ads on Facebook or Snap. We create the ad unit for you. You want to have your e-com site with the 3D products. And again, Nextech is your one-stop shop, end-to-end solution. Nextech AR Solutions, and it's all self-serve. That's really the most important thing that we can do as a public company in terms of bringing value for our shareholders. Up until now, it's all been about testing, seeing what works, seeing what doesn't work, and then figuring out how to scale, because scaling is really the holy grail, right? Like, what's the point of being able to make 1 or 5 or 10 or even 50 AR experiences it's pretty meaningless in, when you're dealing with billions of people
Right.
and right, and the global demand. So we now and we talked about this earlier, with the leveraging AI and computer vision into our AR tech stack has allowed us to be able to scale the content creation of human holograms and product holograms at a scale that none of our competitors can compete with. And it really does set us apart and allows us to offer these SaaS platforms. You will not see another SaaS platform competing with Nextech because nobody has the capabilities to be able to scale, so that if we get 1,000 customers a day, 10,000 customers a day, we're able to meet the demand. Nobody else can do that. And I think it's really important for everybody that's watching to understand that piece of our business.
And there's Jerry in the chat. Jerry, I don't know you, Jerry, but I like how you think. The potential for memes is off the charts. And yeah, you're right. So guys, Evan Gappelerg, as I said before, he's the founder and CEO of Nextech AR Solutions. We've shared with you some slides from their presentation today. You can learn more about the company. Evan, one last point for you, give you the floor. Any website, product, whatever you want to plug, the floor is yours.
Benzinga. No.
Hey.
No, I mean, look, building a technology company does take time. I feel like we've put in the time, we've put in the energy and the effort. We're at a critical stage. We're really crossing over into this new divide, into this new 3D digital world. And, companies like Google, Microsoft, Facebook, they're all, giant multi-trillion dollar technology companies that are betting their future on 3D, augmented reality, cloud computing, even EVs. Nextech is a pure play augmented reality company that really offers investors an opportunity to get positioned and really ride this wave. And that's, as the single largest shareholder, that's exactly what I'm doing. I've been buying stock for the past 18 months and continue to feel that our company is tremendously undervalued as an investment.
All right. Evan Gappelerg, thank you so much for coming on All Access today, guys. When I said emerging companies, I meant it. Emerging Metaverse, right? It's the buzzword of the month, of the summer. Evan, thanks so much for coming on today. Appreciate it.
Thank you, Spencer.
All right. Guys, smash that like button. Let's go for Nextech. Or if you're just like, yes, augmented reality, yes, Metaverse, yes, all of it. Even if you don't know what it means, it's okay if you don't. If you can admit you don't know what it means, that's okay too. Okay, heck, I don't know what it means really, right? I mean, I think I know what it means. I've seen Ready Player One, but this is like this is the stuff that makes you go, oh my god, the future is not that far off. The future is now. The future is here. So this is a company that is on the forefront of that. I thank Evan for his time. I kept him a little bit long, so I thank Evan for his time today on All Access, because that was some pretty cool stuff, right? We'll have to check back with them maybe this time next year and see how that, now that they've got the technology going, and now that we're I guess more or less coming out, we're reopened, right? And see how that scale is going. See how that scale is going for them. But this is undeniably cool stuff. I give them props because it's not just about the technology, right? You need to figure out the business. Who are you going to sell to, and what are you going to sell them? So, that's what Evan spoke to, and I wish them luck, and thanks for joining us today, Evan, and everyone in the chat. We got some good questions in the chat, so thank you. You guys were very, very well behaved in the chat, so thank you. All right, I do have one more guest here joining me, supposed to join me on All Access today. He's not here yet, so we're gonna wait for him. Gary Santo, he's actually the new CEO of Tilt Holdings, a cannabis play, and so let's wait for Gary. And while we wait for Gary, let me do one of my classic crypto updates. Today is actually a fun day for a crypto update. Oh no, my gosh. Oh, China, why do you do this to us? Why do they do this to us? So as soon as I got in today, I looked at Randy on our news desk and I said, Randy, it looks like we're going dip buying today because that's what's happening. Bitcoin, actually, look, it's actually recovered. It's recovered, right? I'm not looking at a chart. I don't have any charts in front of me. I just have this heat map, which you can get, by the way, benzinga.com/crypto. And it seems like Bitcoin's gotten better. But yeah. Anyway, if you missed the news, the People's Bank of China, China's central bank, has reaffirmed what they have previously said, which was, we think that all crypto transactions should be illegal. So that's the headline here. It's weighing on the whole cryptocurrency market today. It doesn't matter what you own. I'm sure there are some cryptos that are up today. You know what? Let's check. Let's just go to CoinMarketCap. I am sure that there are cryptos that are in the green. Yeah, there always are. That's the beauty of crypto, right? Tether, Tezos, Axie Infinity. We got a little bit of green. But let's be honest. It mostly looks like that. So I don't know. I am strongly considering buying more Ethereum today or Solana. I don't know what I should do. I don't know what I should do. Chat, you tell me what I should do. Tell me what you're doing. And while you tell me that, I do see our next guest here. Whoops, sorry. I don't want to bring that up on the screen. Let's bring on Gary Santo, the CEO of Tilt Holdings. There he is. And we'll get him on All Access. Gary, how we doing?
Good. How you doing? Sorry about that. I was clicked on the wrong link, I guess. So
but blame the other people at Benzinga. It's their fault. That's what we'll say. So Gary, interesting to talk to you right now. You've had a pretty interesting year. I want to talk about Tilt, but I also want to talk about you. So first, tell us about your background, and then tell us how you ended up at Tilt.
Yeah. So I've spent most of my career working in finance in one way or another, mostly at startups or at companies that are really going through some kind of a transformation. So maybe they did a big M&A, maybe they're delisting and relisting or something along those lines. So from that perspective, they've all acted in a small entrepreneurial mindset, having introduced themselves to the markets. Most of them have been story credits, so not markets, not companies that are easily understood.
Yeah.
And I started probably about 25 years ago or so in structured finance, where the company I worked for was a financial services intermediary. So they sold B2B services basically to banks and any aggregators of consumers. And, we would take the time to develop products. We'd develop the underwriting. We'd take in the applications, managing the servicing of it. And then, every quarter we would bundle all the loans up that had been made, and then we would go out to the capital markets and sell them. So, as I look at Tilt, it's sort of coming full circle in the sense that, I've been looking for another startup kind of feel, even though Tilt's been public since 2018. But, I think also the secondary piece of that is, the fact that we're trying to do a B2B play as well. So we're trying to be that intermediary. We're trying to be that person one step removed from the actual consumer and support all the brands that really go out to the consumer. So it's a nice full circle. I think 25 years ago, I had a lot more brown hair, and I'd wonder why guys like me needed to exist.
Yeah.
And complain that anybody, I could do this, with unlimited time and unlimited resources. And my very first CEO told me nobody has that. Take advantage of the people who've done things like this before you, learn from them, and then learn how to make it better. Now I'm that gray hair guy, and I'm hoping to be able to give back, I guess, a little bit to the team at Tilt in the process.
Nah, you've got that just for men going on. It's all good. So you're a finance guy.
Who showed you the receipt? I don't understand.
So you're a finance guy. You're a markets guy. So you've seen the cyclical nature of this industry. You saw cannabis stocks in 2017, I think, and then again last year, and it's very cyclical. You know this. So what was it exactly? Because you joined Tilt a year ago, right?
Yeah, in July last year.
Right. So tell us about that decision, because and sort of why why actually make the leap then to working in the cannabis industry?
Yeah, it wasn't easy. So I went from financial services for about 16 years to
Yeah.
casino gaming and equipment. I did a stint at a rating agency down on Wall Street, and then finally it was in life sciences
Okay.
when the cannabis market started to call towards me. And when I looked at life sciences, so much of what they do there is getting credit for their pipelines. They have a premise, and maybe they get one of their drugs all the way through.
Yeah.
And then really what they're focusing on is what else is in their pipeline that may or may not ever see the light of day. So as I look towards cannabis, and this would be probably about almost 3 years ago now, I saw that same kind of promise, where we have all these companies lining up. They're talking about the revenue they think they're going to be able to generate in the markets they think they're going to enter. Now, none of them were waiting for drug approval, naturally.
Sure.
But for them, it had to do with regulatory and everything else. And what I thought was interesting is there weren't that many folks who were real operators. They were good at raising capital. They were good at talking about top line revenue. But how many were real operators? How many had done this? And then you had an investor base, at least in the US, they couldn't really touch it. So the institutional investors that would be the like-minded sort to partner with on something like that, they're not available. So you were pushing kind of a retail story with this high growth story. So I was lucky enough to enter the market through a company called Columbia Care. I owe a lot to Nick Vita and the team there, because what they showed me is it was possible to be an operator in cannabis and act responsibly. It's not as sexy. The growth profile isn't so amazing at the outset when you're just kind of accumulating and doing things pragmatically. Right. But they showed me that the same business principles that apply to just about every other industry can in fact apply to cannabis. So making the jump to Tilt was a little bit of a gamble, because Columbia Care was certainly building out most of its assets and has tremendous potential in front of them, and I love what they're doing.
Sure.
But Tilt had a chance for a second act, and the bones were so strong and they were profitable, and I was impressed by the fact that they had been financing their operations out of their own cash flow, really, for about a year prior to my coming on board. So that put them in a separate space, and I thought it could be really interesting and fun to join the team.
And surely you had seen the cyclical nature of the institutional deal flow got hot, and then the deal flow all dried up, and I guess it's coming back a little bit. But was that a factor into your decision? Because this is last year, so I guess this was last year, so last summer. So I guess things had already started on the upswing again. But surely you had just talk about that. That the cyclical nature of the industry, and sort of how much that weighed on you as you made the jump.
Yeah, I think it's trying to identify what that cycle really is.
Right.
Certainly the market was overheated. Columbia Care went public in late April of 2019. And then in May, that's sort of when the bottom started to drop out. And I guess the retail investors were pushing back, saying, hey, all this unlimited growth on the revenue side with no pathway to profitability is getting old. So I think there was a tremendous boomerang and a reset. Then you rolled into the vaping crisis. Then you came out of the vaping crisis and rolled right into a respiratory pandemic. But I think what started to change in early 2020 was when cannabis was declared an essential service. And when the consumer continued to speak about the role that cannabis plays in their everyday lives, not episodically, like you're going to go out and just absolutely light it up one weekend, but more for how they manage stress, how people manage pain throughout their lives. So it showed a resilience that I thought was interesting. And as I looked towards Tilt in July of last year, they had just gone through a management overhaul a year prior. At one point, they were down to about $2 million cash on the balance sheet. But then they were up, I think, by the end of the first quarter of last year, I think they were up to somewhere around $8 million, all from organic cash flow.
Wow.
And certainly there are cycles there, because half of the business involves, non-plant touching assets. So we are a distributor of C-cell products. So the orders and when those orders get placed and when they come through, there's a cycle there.
Yep.
But as it pertains to the equity side, I'm still trying to figure out what that cycle is. It's not clear what drives some of this stuff. So I've never seen a sector that can be completely red one day and completely green the next day.
I know. Okay, so July 2020, you're the president of Tilt. Fast forward a year, you're now the CEO of Tilt. So tell us about Tilt again a little bit more in detail. CPG, consumer packaged goods. Tell us about the product categories and the plan here.
Yeah, so look, when Tilt went public in 2018, they had a similar mandate to most of the cannabis companies out there, pretty wide. We're going to be vertically integrated in all the states we operate. We're going to have technology, software, services, delivery. They were going to do financing. You name it, they were going to try to do it. And I think the board recognized pretty quickly that it's too broad of a mandate. There's no way enough capital could be raised to do that, and no company is probably able to do every one of those things well. So really, when I came on board last year, it was with the intent of the base had been stabilized and the management team had done a great job there. Where does the growth come from? And that's when we started to look at the assets we had. And in Jupiter, that's our inhalation and packaging. We had this B2B model with over 700 different customers, so MSOs, LPs, and brands, providing products to them on a bespoke basis. So it could be something completely customized, vape hardware, the power packs, the packaging, as well as the mouthpieces. It could be white label, so take one of our existing designs, you want to rebrand that your own, or it could be something with a Jupiter label on it. So that had proved to be a very profitable business. Top end margins, say in the mid 20s, low end EBITDA, the margins on EBITDA side in the mid to high mid teens or so. The problem is we didn't own enough of the supply chain, right? So we're a distributor. We partner with the owner of the C-Cell Technology, Smoore International, out in Shenzhen, China. As we look towards our plant touching assets, it was a little late to jump into the MSO game and try to go after retail footprint and all of those things. But we had some really good assets in Massachusetts and Pennsylvania and Ohio. And we have been doing a pretty robust wholesale business because we didn't have any retail in Pennsylvania or Ohio. And in Mass, where we do have 3 stores, only one of them had been authorized to open for medical only. So we saw an opportunity to take that same kind of B2B process and bring it to the plant touching side, which is a little bit different than how other MSOs think. So for us, do we want to buy brands or partner with them? Well, we know buying brands and maintaining brands can be incredibly expensive. And while we believe CPG is the future, it's going to take a bit. There's going to be different iterations, and certain brands will excel. Certain brands will be the forebears, and then certain brands that might not even exist yet might be the ones who come in and take over on the other side. So we thought it better to partner with folks, sort of an asset light approach, and leverage our distribution. So we hit 90% of dispensaries in Pennsylvania, 50% in Mass. Now we're going to have our 3 retail stores, and partner with brands like 1906 and Her Highness and Aero and Old Pal, and help them understand how to come from west to east. So that turnkey slide that you had up before, we're not a typical contract manufacturer where we pay some fee and then we do a bunch of product manufacturing and then we dump it all to the counterparty to go and distribute, where they have to now build out sales and infrastructure. You have access to all of that from day one. So all you really need to come into our markets is just a brand ambassador, somebody who can go out there, do the pop-ups at the different stores and generate the buzz. We'll take care of the processing, the manufacturing. We'll source the biomass if we're not growing it ourselves, depending on the product you want. And then we'll get you into those stores. So I think that's what allows us to launch Old Pal in less than 60 days and Her Highness in 30 days. And Aero, I think, took us about 45 days. So it's not typical contract manufacturing speed to market.
Since you talked about distribution, let's go there. Tell us about the distribution. Tell us about the footprint.
So because we do B2B sales, because we are very explicit about not wanting to compete with our customers, we're able to sell into the MSOs because, when you look at what most of these shops are carrying, even in Pennsylvania where the MSOs are getting a bigger footprint, they all tend to lead towards premium flower. They have their own products that they want to put out there. They're trying to make a certain margin profile, and about 70% of what they put on their shelves is going to be their own. But another 30% will be a curated portfolio of brands. And that's where really we want to be the main provider. So having brands, we have our own house brand, Standard Farms. It came from Pennsylvania. We'll be rolling that out at all of our plant touching venues probably early next year. That'll be our house brand that sort of fills in the gaps. So if an MSO is doing high-end flower, but they just don't have time in Pennsylvania, for example, maybe to do capsules because there are no edibles, the capsules are big, we'll step in and either on our brand, their brand, or if there's a third-party brand that we're working with, we'll get them that product because we know they can't do everything.
Right.
And that's where being able to sell and keep an eye on the market and keep our finger on the pulse as to what's hot and what's selling. That's what's going to be key. With us having that sort of asset light approach, we're not going to be so invested in any one product line that we just throw our hands up and say, well, it used to sell great. We can shift gears and lean into the products that are selling good.
Right. So Pennsylvania, you're in Massachusetts, obviously. You're in New York, right?
Yeah, New York is the new one. So that's a unique twist as well. So, we were looking for a way to get into New York. Great market. Obviously, adult use is coming, and we think wholesale will be coming as well. But the price tag to get in was huge. We saw that MedMen deal earlier this year, about $75 million to really get into that space. And you're going to have some CapEx to build out the cultivation and manufacturing a bit more. And even my former shop, I think they spent about $45 million to add a bunch of greenhouses in Eastern Long Island. So finding a partner that really would focus more on the retail side, and we would manage the cultivation, the processing and the distribution. That was sort of the holy grail for us. And, through an investor, we met this firm, Connor Green. They specialize in working with Native American tribes, and came across the Shinnecock, which, as a native New Yorker growing up, I remember going out on weekends to the Shinnecock Festival every Labor Day. So, to kind of be reacquainted with my old home, for all intents and purposes, was interesting. And seeing the way they were approaching cannabis in general. They've been at it since 2015, very methodical. Even though they had their own Cannabis Control Commission on the native grounds, they were mirroring a lot of what the language was in the New York State regs, that when the time would come and adult use was allowed and wholesale was allowed, it would be easy enough to sell product over sovereign nation lines. So instead of spending 45 or 75 million, we spent 700,000, half of that in cash, half in stock. And even if we hit all the milestones, maybe another 2.5 million in shares. So every dollar we're putting in now is to build out cultivation and manufacturing and the dispensary, which we'll manage. If all we ever get is the one dispensary and we sell on land, that's fine. But it'll be really interesting, if we can get what we think will be the adult use and the wholesale ability to reach the whole state.
Right. And are there other markets? I don't know if you can even answer that, but so let me phrase it this way. Are you targeting new markets next year?
For us, I've always talked about a Northeast corridor. And as I always look forward, I think about what does legalization look like? When you have a lot of assets spread out throughout the country, even in a fully legalized world, and let's assume you can cross state lines, trying to get all those businesses to work together is going to be a challenge. You're going to have a lot of infrastructure and overhead you'll have to do something with. I like the ability to create this Northeast corridor. So now I'm connecting Massachusetts and Pennsylvania and Ohio and New York. So as I look to like New Jersey or Connecticut or even Rhode Island, and create this Northeast corridor where basically all my operations are within a few hundred miles of each other, I can start to think about centralized heads of cultivation and heads of cannabis operations and really share the leadership team and get some synergies there.
Nice.
And from that nexus, I can probably hit about half of the US very easily on a distribution basis. So I think that's it. I don't rule out going anywhere. Certainly Michigan looks interesting. Texas is always the land of the future. But, I think having that centralization there does give us a chance, I think, to be very efficient with the assets we build.
And New Jersey is my home state, so I vote you go there next. And you bring up an interesting point there, because my next question was going to be just about the fragmented nature of cannabis in this country. But I guess the next step, I've always thought, when is there going to be a national brand? But I guess I've skipped over the middle step, which is regional brand, which doesn't exist yet either, but sounds like that's where you're going.
Well, I mean, it's hard for MSOs to build their own brands. Take Massachusetts, for example. Sure. You're allowed 3 retail stores, right? No matter how big you want to be, you get 3. So if you want to build your own brand, you can certainly do it in your 3 stores. Right. Problem is the next MSO across the street from you has his 3 stores that they're trying to build a brand, and they don't really want to buy each other's products to support each other's brands. That's where I think trying to come in with this third-party cultivation of non-MSO affiliated brands and or helping MSOs with their existing brand architecture gives us an interesting play on all of that. And I think the other piece too is what are the form factors and regulations? What we've noticed with the brands coming east, whether it's Old Pal, whether it's Arrow, what you're able to do from a form factor, from a packaging, from marketing, from a formulation standpoint, it's different. So it might sell on price and potency in California, but I might not be able to do that in Ohio, where I might have caps on THC. So how do you keep the brand architecture intact and fidelity to the brand name and still have a meaningful product in that new space? I think that's the challenge. That's really where our level of expertise is. We work with the brands, we figure out what's key and important, and that's why we're able to do things like roll out a brownie for Old Pal in Massachusetts that they've never had before, but it fits their brand MO perfectly.
You said the R word, regulation. I gotta ask you, is the safe banking bill, is it ever gonna pass?
It's funny. And I've said before, sometimes I think, everybody wants to do too much all at once.
Okay, that's fair.
It's great to tax safe banking into the Defense Act. I am a little worried there because, we've seen over in the Senate where safe banking keeps going to die, that, there is a pushback and a concern by folks like Senator Booker that, hey, if we allow safe banking, then people are going to take their foot off the gas.
Yep.
And ultimately, they won't want to do the other pieces for social justice and social equity and everything else. Now, putting it into this defense bill, I think, is problematic because there are certain items in there that could end up accidentally uniting Booker and the GOP senators, like stripping out the wartime powers of the president and other hot topic items. So you could be in this bizarre place where the latest attempt to get it over the finish line creates the weirdest of bedfellows, right? Booker plus GOP senators, alignment. So, I wish they would just break it off into smaller snippets and then just be intentional and keep following through, because the broader they go with this thing, you're always going to find somebody who'll push back against it.
Yeah, this is why I don't like politics. But you're probably onto something there. And Solar Up in the chat brought up the defense bill as well. I was very surprised to see that development, I guess a few weeks ago now. So, but it sounds like there are some problems there as well. So yeah, I guess we'll just have to wait and see. But those of us, and you and me and people watching that are into the space, it's frustrating, because that was supposed to be the big thing this year, maybe even last year, but then we had a pandemic that got in the way. So anyway,
look, given the tax revenues that cannabis is throwing off, you would think that the government would be incentivized to try to streamline anything that allow these companies to operate more efficiently and process payments and cash and everything more efficiently. So, it's not clear why it keeps getting bogged down. This is a mechanical piece. There's still plenty of opportunity to do all of the other morally obligating pieces. Just stay intentional. Keep building the coalition. You've got 30 some odd states that have said this is something that's important. The federal government shouldn't really be struggling this hard with that kind of a mandate.
All right, that's enough of the politics talk. Let's go back to Tilt. Looking forward to next year, what are going to be the big storylines for you?
So I think for us, we're excited that I think in the next week or two, we should be opening up our Brookline dispensary. So now we'll have our second dispensary open. And before the end of this year, we should have adult use in both our Taunton and Brookline stores. So having a full year of adult use, and then adding our Cambridge dispensary in early 2022. Most likely it'll be medical. I think that's going to be very big towards driving growth. And we're nowhere near as efficient as we could be in our plant touching operation. So, when we rolled out our brand strategy at the beginning of the year, if you would have told me we would have signed 4 brands and launched 3 of them already, I would have said never. That's already 2022. So I'm excited to having a full year of brands and a few more brands that we could be bringing on as well. I also think New York, we have a chance there to accelerate that build out. If we can get some movement on the wholesale side at the state level, I could see us accelerating the dispensary and start bringing in third-party product from other MSOs and just start wholesaling that while then finishing our build out. But either way, we expect to be operational by the end of next year. So I think those are certain pieces there. And then over on our inhalation and non-plant touching side, we just continue to see great growth. We've got some good R&D going with some new vapes and vape designs. And I think they're coming out of the pandemic. We've seen a change in the consumer a certain amount where they're looking for different ways to vape. Certainly there's a rekindling of the heat not burn effort. Like how do I get as close to flower without combustion as possible? Certainly having better products to help you with the waxes, the shatters, the live resins, the rosins. Because I think some of the existing equipment out there now can be tweaked and used, but it's probably not optimized. So I think all those things are 2022 initiatives that excite us.
Ron with Gary Santo, as you see on the screen there, he's the CEO of Tilt Holdings. Gary, before we let you go here, what is your message to cannabis investors who like me, for example, I'm so excited about the future of cannabis, right? All the things it can do, but it's been a frustrating. Actually, no, last year was great, but it's been a frustrating year this year. So, what do you say to the people that are just waiting, whether it's waiting on this safe banking or whatever, they're waiting and waiting and waiting, especially the people that have been in the space for a few years now and are running out of patience maybe?
Yeah, I mean, look, this is an industry that started off getting credit before credit was due, right? It's like I talked about life sciences. You had to at least get one of your molecules close to the finish line to start getting credit for the rest. This was inverted. So I think being realistic and looking through at, who is developing good operational foundations, who are showing a pathway to profitability, who's being efficient with their capital, keep looking there. The broader market, I would say, if you're invested in the space, you've got to take on the mindset of a high growth investor. And those folks are looking 2 to 3 years out. They're looking for companies to reinvest into themselves and make sure they're investing in the right places to then, sort of spark that growth down the road. So, don't be distracted by the shiny baubles jumping into this market or that market. I think try to look a little bit closer because the fundamentals in cannabis are no different. I know vertical integration has been sort of the thing and everyone talks about that. Yeah. But in most specialty retail, vertical integration falls off at some point as it becomes a more mature market. I think we're kind of getting close now. We get legalization and vertical integration may not be the best thing out there, but, the way it's currently laid out. So, I think patience is key. Try to spot, I don't think you have to look hard to find the diamonds in the rough. And probably the most important piece, and I got this from talking to an investor just earlier today, they always say, wow, Tilt's one of those stories that I've got to really do my homework, because with other MSOs, I see what they do in one state, and then I can just multiply that by the number of states they're in. It's like, actually, no, you can't. If you're someone like a Trulieve, for example, what you do in Florida, you're not going to replicate in Massachusetts.
Right.
So if you have investors who are doing that, get out now. Because that's going to be a problem.
Right.
So it is a little bit of a story, but the whole point to story credits and markets in the state they're in is there should be some pretty high rewards, and there are a lot of great companies in this space, and they're going to pay off, but it's not going to be a day trade play.
Sure.
It's coming.
I love, this is one of the reasons why I love the space, is because there is no known path forward. There are many different models. There's the MSO model. There is the model. Tilt has gone away from that. There's a different model. There's many models here. Some have already been tested and failed, but we don't really know the right way yet. So it's sort of an unknown, and I respect the creativity and not just replicating, because I don't actually know. Are there other companies that have this kind of model that you have? I don't
know. I mean, we talked about the idea of calling ourselves a vertically integrated B2B player. I'm like, vertical integration means something in this industry. It's probably not right. But
maybe like a slang, or no? I don't know.
I don't know, because if you look the way we touch the plant and then the side that doesn't, we sort of do give you everything you need. If you're a retailer, if you're a MSO or something, you can come to us and get pretty much whatever you need. Now, granted, we're limited on the plant touching side to the states we're in. I get that. But, I think 30% of our revenue right now is coming from cross-sold people who are both customers of our hardware and, of our non-hardware division. I mean, Old Pal's a great example. They came into our state. We do some of their product. We did our bespoke product. And now in Massachusetts and Pennsylvania, they're going to use our Jupiter hardware. So they're touching every part of our business, and we're giving them sort of a turnkey operation as a result. So I've seen people doing bits and pieces. I don't know if anyone does it exactly this way.
All right. Super interesting stuff, guys. Gary Santo is the CEO of Tilt Holdings. Gary, thank you so much for coming on All Access today. Will I see you at the Cannabis Conference in October in New York?
Absolutely.
Yes, guys. Gary will be there. I'll be there. You should be there. bzcannabis.com. Gary Santo, have a good rest of your day, sir.
Thank you. Have a great weekend, everyone.
All right, that'll be a wrap for All Access. We've bled into the next hour. SPACs Attack is supposed to be going. I think they're live already. If they're not live, they're going to be live soon. I'm going to end the stream. It'll redirect to those guys, Chris and Mitch. But thanks to Evan, thanks to Gary, thanks to all of you in our chat. Let me do a like count real fast. What are we at? Hey, let's get to 100. Let's go right now. We get 15 more to 14 more to 100. Let's get to 100 likes here. It's Friday, right? That's a reason to like the show. It's Friday. It's not raining for the first time in 4 days where I am. So, and we got, long form conversations. We don't do enough of this, I think, at Benzinga. I love the long form stuff. I love taking a half hour or more, 40 minutes, talking to these founders about the company. If you have a company that you think should be on our All Access show, let us know. Email shows@benzinga.com. SHOWS @benzinga.com. Tell us who you want to hear from for whatever. We're always open. We're always open. We're at 94 likes. I am making the SPACs guys mad because I'm going into their time, but I want to make them madder because I'm going to wait until we get to 100. So SPACs Attack is going to be live right now, followed by the Power Hour, followed by Get Technical. It's Friday, right? So mood or bust. And then I'll be back with y'all at 3:30 with y'all for at the close today. And okay, I've deemed us there because we're at 100. There we go. We're at 102 likes. All right. Thank you, everyone. Have a good rest of your day. Stay green. Come on. It's Friday, guys. Thou shalt not lose your shirt on a Friday. That was one of the commandments. That was like the 12th one, I think. Or maybe 13th. I don't know. All right, everyone. Have a good rest of your day. SPACs Attack going live here. I'm going to end this show. Let's end it with a commercial. Let's do it with this one.